Think big, trade smart. This video is presented by Meitou Investing. Hello guys, welcome back to another Meitou video. The company I'm going to introduce to you today is probably one of the most controversial companies in the market right now. As a stock, it's the fate for many retail investors. The general expectations for those who believed in it is that its share price can rise at least tenfold in the future. Catherine Wood, the president of ARK Fund, has been buying its shares, and this stock is highly sought after on the Wall Street Bets subreddits. By contrast, most analysts on Wall Street are downbeat, with an average price targets for the end of this year that is 10% below the current price. As a company, its revenue are growing steadily and rapidly, at an annualized rate for about 30% a year. Yet it has never turned into a profit in the near 20 years of existence. As a high-tech company, the company is filled with all kinds of genius ideas and the industry's top talents, but they're engaged in some of the business that its peers are despised. So what kind of company is it that it can be both vilified and celebrated at the same time? Is it worth investing in? Well, today, I'm going to take you through the rough deconstruction of this controversial company. And for those of you who haven't subscribed yet, please click that subscribe button down below and turn on that little bell so you don't miss out my next great video. As many of you might have guessed, today's company is PLTR, symbol ticker PLTR, a software company that provides big data analytics. PLTR was founded back in 2003 and has been despised by its peers ever since. After the dot-com bubble burst in 2000, Silicon Valley's technology firms focused on developing database, internet applications, and other related fields. PLTR, however, went on the opposite direction. It also developed data technology, but it worked as an agent for the American governments. That's hardly a statement to the rebellious internet genius in the Silicon Valley. PLTR didn't grow like any other traditional innovative technology companies, like starting with a couple of computers or founded in a garage whatsoever. It was funded by secret investment from the CIA's secret fund In-Q-Tel. And soon, with the government funding and the efforts of a group of talented engineers, PLTR grew rapidly. Not only it did receive visitors from the US government, but it also did private works for countries like Britain and Sweden. This made a great fortune for PLTR's founder, Alex Karp. But fortunes always comes with misfortunes. Because PLTR was associated with government and secret agents, Karp himself is often receiving death threats which he has to hire guards 24 hours a day, 7 days a week, and unable to live like a normal person. I think this guy really looks a lot more like Dr. Halliday from the movie Ready Player One. When I was doing my research, I even found that some investors posted online stating that they chose PLTR because of his flowing hair, which is very interesting to me for a company like PLTR. In the eyes for many Americans, working for governments normally means doing bad things, but that's not necessarily true. The US military used data from PLTR's Gotham platform to locate terrorist leader Osama bin Laden. And because the military and secret agents involved, the question whether this was true has never been taken seriously by the governments. But it's very likely that PLTR did contribute to the investigation. Many investors may not understand why PLTR gets big contracts from the government and the military, like what kinds of value do they offer? So for many investors, working for the government is a dead-end job. But here, I'll give you a few examples and maybe you'll understand why. As we all know, the US government often faces domestic anti-war pressure. The most typical one is the Vietnam War. For many years, war casualties has been a nail in the American memory. The government, too, has had to accommodate public sentiments, juggling terrorism with the withdrawal of troops. The question, however, is not whether to send troops to kill terrorists, but how to stop them in advance. And this is where PLTR's big data analysis systems plays a vital role. The US has been using drones, surveillance planes, balloons, and other equipments to gather information in Afghanistan and elsewhere. And years of information collection have accumulated a large amount of data. How much data is there? Well, it would take a person at least 2,400 years to review them all, day and night. And therefore, how to obtain useful value from such a large amount of data has become the key. PLTR is able to process, source, classify, and convert a large number of original images into valuable information through its platform, and finally identify possible threats. For example, when one group of soldiers is out of patrol, another small group will use PLTR to provide technical support to keep their fellow soldiers safe. They use balloons with sensors, such as radars and cameras floating in the sky, to watch what is going on the surroundings, in real time without the soldiers' knowledge. By using the vast amounts of information previously collected as the basis for big data analysis, they can predict in real time and inform their commanders of every single ongoing detail. Let's say, for example, a civilian in a purple hat is in the distance, and suddenly he squatted down, and PLTR software could instantly tell whether he had a stomach and had to go to the toilet, or was he burning explosives. If there is a danger spotted, PLTR software will immediately send an alert to prevent accidents from happening. This was actually a real case, not something I made up. And that's because the color purple is so unusual in this area. PLTR flagged the man based on its information and a number of other characteristics. And after tracking down the man for weeks, it was determined that he was indeed a terrorist, and discovered that he had been planting mines. Later, villagers in the neighborhood knew about this technology and came to the US military base hoping to find out who had stolen their sheep, which was a very interesting fact I found. Some believed that the military with PLTR are like having a God's perspective, which they are able to see everything that is going on. If not, it's not that PLTR can't see it, it's that they don't want to see it, because it probably didn't matter to the overall course. This makes it impossible for terrorists to avoid being targeted, even if they know they are being monitored by the American forces. Well, is PLTR software really so powerful? To be honest, I don't really know. But something I'm sure is that the software has reduced the number of American casualties in Afghanistan. Many soldiers have been saved by PLTR without knowing it. And therefore, PLTR isn't just merely a supporting software for the US military, but an indispensable and increasingly important software in the long run. PLTR is not only vital to the military, but also to the government as well. For example, PLTR has played a very important role in the pandemic. In the initial phase of vaccine distribution, how to distribute the limited vaccine to where it's needed and to the people who mostly need it is the priority for the governments. The task sounds pretty easy, but in the practice it's not. You have to take into account for all kinds of information, such as the population base of the 50 states, the time between shots, different vaccine brands, temperature requirements, transportation conditions, population density, major disaster, race, age, employment, and so on. And PLTR had this similar experience before the pandemic. It played an important role in the food distribution system, distributing food within its sell-by dates to those who needed it the most. Similarly, during the vaccine distribution, PLTR integrates demographic information, employment, and public health data to target those most in need of vaccination. Then it finds the limitation of vaccine distribution and provides real-time data and information of vaccine inventory to the decision makers of the federal government, and finally provide an optimal solution. So PLTR in the beginning was built on these government and military needs for big data analysis, but it knew it cannot stick only with these types of business, which it later developed other systems for the civilian sector. JP Morgan, for example, used the PLTR's Metropolis platforms a decade ago to analyze employees' communications to screen out dishonest employees. They analyze employees' email, downloading activity, company phones' GPS locations, and other information, and use these keywords and specific behaviors to analyze and predict who are likely to have a mental decline, so it can take early actions to maximize the company's interest. In fact, PLTR has a lot of civilian applications. For example, it helps large power companies analyze daily data on electricity consumptions to figure out which power stations will operate and when they operate, and to improve the overall energy savings. And there are more other examples, like helping oil companies to find oil, helping gold companies to locate gold, and so on. So it can be seen that PLTR is not simply to help enterprises do better, but to provide enterprises a software to promote their business to the next level. The reason why I spend so much time on the application of Palantir is to give you guys a true impression of this controversial company. I find that many investors have extreme biases or preferences about a company without knowing the whole business. And this is often fatal to our investments. So, now let's talk about Palantir's core business and its future. It will give you a deeper understanding of how to invest in this company. Palantir's products are divided into two broad categories: standalone software and platform software. Standalone software refers to software that Palantir sells to customers with specific needs. Foundry and Gotham are its flagship products. The software's customers tend to be the government and large corporations. This part of the business is characterized by a high degree of customization. Because these big clients have unique needs, Palantir can sell CIA software to the BP, the oil company. And on the other side, governments are the most difficult to deal with, requiring data to be worked on a highly confidential environments and physical isolations from the internet, which these sets of things are not really applicable to any other commercial companies. So high customization has made Palantir a very high user stickiness ratio and a strong economic moat. Every time Palantir completes a product, it needs a large number of engineers to support it. To improve efficiency, they usually break a large piece of software into hundreds of small modules, develop them in parallel, and then assemble them together. The hard part is not in the number of small modules, but in coordinating and assembling them all. And this is the core competence of Palantir. On the other hand, the high degree of customization also results in the high cost of software developments for Palantir. Naturally, Palantir's software is very expensive, often costs millions of dollars. According to Palantir's financial reports, its average selling price of each software is $7.9 million, and the average selling price of the top 20 customers is roughly around $33.2 million. So there are not many enterprises and institutions that can afford its software, which also limits the development of Palantir to some extent. And perhaps Palantir itself is aware of this problem, so they are also actively developing platform-based software. The platforms Skylab and Apollo are SaaS cloud-based softwares, which provide Palantir with the possibility to enter larger markets in the future, and also greatly increases Palantir's competitiveness. This may also become the main engine for Palantir's future sales growth. So some of you may or may not know, for SaaS software, because it's shared in the cloud, the security is very important. Palantir is currently in the 5th tier, and it's already ahead of its peers. In the latest earning reports, it said it would hit the top tier, the confidential information category, and once developed, it will be the first SaaS company to achieve this goal. In contrast, Amazon's AWS implements this level of security only on IaaS. So this technology lead will lead to more cloud-based sales in the military and intelligence levels for Palantir. On the financial level, Palantir's latest quarterly results were very impressive, with the company projecting an average 30% annual growth in revenue over the next few years. And since most of Palantir's contracts are long-term contracts and revenue needs to be spread over many years, its revenue forecast is very reliable. But on the other hand, 30% growth is not enough to satisfy investors. And if Palantir can get more contracts on top of its existing customers, future revenue growth is very likely to exceed this expectation. But we can't really focus on the gains, we should also pay more attention to the risk of Palantir. As the most controversial company in the markets, its risks shouldn't be neglected. The first risk is the breakdown of Palantir's customers. So Palantir right now is heavily dependent on the government orders, which currently accounts for 56% of its total revenue with a 77% growth rate. And for the commercial orders, it only accounts 44% and the revenue growth was only 4%. This is obviously unqualified for a fast-growing software enterprise. As discussed above, although investors do not need to worry about the unstable and slow growth of government orders in the present, so if Palantir can't expand its commercial business, its future developments will definitely be limited and it's very difficult to support the current valuation. The second risk of Palantir is that its commercial expansion faces obstacles. So Palantir's software is good, but it may be a little bit too powerful. In fact, many companies do not have high requirements for data analysis, and many large enterprises also have their own data analysis teams. Companies such as Home Depot, Coca-Cola, and American Express has ordered Palantir's software in the past. But later, they found that despite its powerful data analysis capabilities, they couldn't bring about a corresponding revenue increase or cost reduction, and eventually they chose to return it. In addition, public opinion may also become an obstacle to the expansion of Palantir. Palantir's software often handles sensitive personal information. The company says it doesn't keep any personal information, merely provides tools. But the public doesn't believe it, and some companies may choose to distance themselves from Palantir under the pressure of the public opinion, which is also a factor that could hinder the development of Palantir. The last and the third, I think the biggest risk of investing in Palantir right now is that its valuation is ridiculously high. I admit that Palantir is a good company, but a good company is not necessarily a good investment. As can be seen from the chart below, compared with IBM, Amazon, and Microsoft, Palantir's various valuation figures are horribly high. They are at different stages of development, but for Palantir's current growing speed, it's impossible to handle that kind of valuation. And Palantir hasn't shown itself to be convincing enough to achieve faster growth. So we see that Citibank has a $50 sell rating, and Morgan Stanley recently lowered its price target to $17 a share from $19 a share. These are all manifestations of Palantir's overestimated risks. To me, Palantir is indeed a good company with great potential. It has a big market and a strong moat in the future. These 2 points are also the key for me to choose a long-term investment. On top of that, Palantir is standing on the trend of this generation. They can be said to be one of the earliest adopters of artificial intelligence technology, and that the growth potential of Palantir is also attractive due to the huge amount of data analysis required by the adoption of the 5G technology in the future. However, even good companies have their own equivalent valuation. Even if there's a high ceiling for the markets, it's very important to build step by step towards to that ceiling. So it's clear that Palantir is not moving fast enough or qualified enough to justify its current valuation. The risk of investing in Palantir now is also very high. For a company like Palantir, I wouldn't long the stock without any protection. I also can't give you a short-term price target for 2021, so if you believe in Palantir, it's best to look at the investment from a long-term perspective of 5 to 10 years. It does have a good long-term foundation, but short-term uncertainty also makes it very high volatile. So if you're looking for short-term upside opportunities, I don't recommend buying Palantir now. At its current valuation, it's going to have a very high revenue growth and breakout business in order to go skyrocketing, and I don't think that's going to happen anytime soon. Thus, if I hold Palantir, what I would do is to buy a long-term expiration forward call to hedge against the potential high volatility. While that would limit my upside, I don't think it's going to see much of a breakout anytime soon. So these are my thoughts on Palantir for today. It'd be more welcomed if you guys want to share your thoughts on Palantir on the comment section below. If you like my videos, please click the subscribe button. Your supports are much appreciated.